Hello, good morning. It's strange that I'm from the world of fintech, but I'm still in my shoes and blazer, so please don't judge me for that. I'm just missing my corporate career, and I like to wear my blazer sometimes. Anyway, we are here to talk about the opportunity here in the Nordics and how banks and enterprises can work with fintech startups. So I have the point of view of the startup, so I'm curious to see what you guys think are the best ways to work together as well. Interestingly, the event team contacted me and said, can you please talk about what's happening with UK fintech and how we can apply some of those stories here in the Nordics? Now, that's interesting on so many levels. We are assuming here that the UK is somehow superior with their fintech activities or investments. And secondly, is there actually anything to learn from another region or another country? And of course, learning from each other is great, but how much of that is relevant and applicable to your work on a day-to-day life? So Nordics versus the UK. So I had a quick look at what's happening in the Nordics and kind of compare that with the UK, because that's what I do. I sit with huge amounts of data and just number crunch all the time. So this was kind of a hobby for me, and I apologize if it doesn't make much sense. But the idea is that fintech innovation happens from two primary axes. So one is the consumer axis. So this is the axis where the consumer comes and tells you, I need a better customer experience. I need something different from what I'm used to. I need the Google kind of experience. I search for something and immediately find it. I don't have time to run through hundreds of hoops to buy that new banking product that you have launched. Do I have internet? Do I have smartphones? Or do I make purchases on an iPad? So that's the consumer side pushing you into innovation. Now, there's the other side of fintech innovation as well. The regulatory side, the government side. Is the government making any major changes in what's happening? So I'm from India, and one of the things that happened in November last year was the Prime Minister decided we're going to demonetize the two largest bank notes in the country. So the government decided one fine morning that the two largest bank notes in the country are not valid anymore. Sorry, it was not even a morning, it was an evening from the very next day. So what customers could do when faced with a hurdle like that is either go stand in line at your nearest bank or branch, get all your currency notes converted, or start using a mobile payment device. So the payment app in India, the Paytm, had 20 million customers at that point of time. Overnight, they had 53 million customers. So we're talking about regulatory or government push here. So it's not always the customer, and it's very, very important to remember that. The push can come from any side. And what happened was one fintech company in that country went from 20 million to 53 million customers overnight. So that's a tremendous change we're talking about. So if we look at the Nordics versus the UK in terms of these two axes, we see a lot of interesting things. The consumer behavior is pretty similar. The use of technology, the availability of the internet, smartphones. But what's different is in the digital economy and society index, where the Nordics are doing far, far better than the UK. And what happens then, and that's the aim for all of us, whether you're from a bank, the government, the regulator, or as a consumer, what we want is for the consumer to go cashless. So this is a cashless society map, which means if you map all the countries in the world and say, where are you on the cashless journey, this is what you might find. Again, I have 100 disclaimers here. Take it with a pinch of salt. But the point is, if you have the consumer readiness and you have the business readiness, you are pretty much high on this map of going cashless. And you see where Sweden is. Sweden is now 98% cash-free, I imagine. Turkey is doing extremely well. India is now doing extremely well. And surprisingly, Somaliland. So you find countries on the map in terms of their societies appreciating and adopting fintech innovation to achieve the objective of going cashless. So the point I want to make here is the Nordics are really not that far behind the UK in terms of innovation. And maybe there's a lot that we can learn in the UK from what's happening in Sweden and in other Nordic countries. And one example is that the United Kingdom is now having a debate on what kind of material to use in the new £20 banknote. So it's a tactical discussion happening on how to use cash. Whereas in other parts of the world, we are growing exponentially cash-free. So that's the kind of progress that we are seeing in the rest of the world. Now, this is the map that kind of tells you why the UK is considered the fintech capital of the world. It's a very clear leadership, if you look at it. The UK is far, far ahead of any other country in the world, including the US, especially the US, in the number of challenger banks launched in the last 5 years. Now, why is that important? So this is a model where new banks are offering products and services to compete directly with incumbents who have been around for possibly hundreds of years. So this is the culture of the challenge that drove the fintech innovation, and all the startups you see today are fundamentally evolved from a culture where challengers took on banks directly. And they took them on because there was an issue of trust, an issue of not having enough customer experience within the products and services they offered, not being able to offer a personalized solution to the extent they were looking for. So that gap kind of created the whole challenger banking industry. And the UK was the leader. With the whole economic recession and bailouts and the poor customer experience we have been having in the UK, this became a clear target area for everybody to invest in. I don't know if it's a good thing or a bad thing in terms of the number of challenger banks we are seeing in the UK. On one hand, it's great that there are so many niche challenger banks evolving by product, mortgages, savings, current accounts, and by regions. I mean, there are challenger banks in China focusing on regional population that the bigger banks were never interested in. Same thing in Africa. So this is capturing a whole new set of population which never existed before. However, on the other side, is there a need for 40 new challenger banks in the UK? So that's the big question. I mean, is there such a big market that people are going to go to each of these challenger banks by the tons? I don't know. Again, if you look at the metrics of countries, in a very sweet spot for challenger banking. And I have to say, Finland has actually moved, or is moving really fast from the left to the right here. So this was prepared maybe 5 months ago, and they've already changed. And this is where lack of trust or the lack of customer experience versus the consumer's need for better experience and better channels is driving challenger banks to form around the world. So even if there are not enough challenger banks in Asia, for example, at the moment, this is going to happen. It's just a matter of time. So this kind of tells you again, in terms of the fintech innovation happening around the world, there is a lot of push happening from different macroeconomic, demographic, and regulatory factors, which we need to take into account. Otherwise, we run the danger of not understanding what the customers are looking for. And as banks, and most of you, or some of you are banks here, the danger, the challenges happen because there is a gap between what the customer wants and what you're willing to offer. So this is where we need to understand and employ a lot of consumer behavioral staff and designers. So again, from the push angle of regulatory and capital, so the government can do a lot of activities in the right direction. Sweden is a great example again. I mean, the app, I think it's called the Swish app, in Sweden has pretty much negated the need for cash in the country. So I used to live in Sweden years ago, and I had a lot of coins and krona from my time there. I wanted to spend it all. But trust me, every shop I walk into, they don't accept cash anymore. They don't accept coins, they don't accept cash. They only take the app. So here is a country where the government has decided that we need to reduce the operational cost of the cash, and it's pretty much non-existent today. Now, this is my problem with challenger banks. It's a great phenomenon. Innovation in any form is absolutely phenomenal. However, and that's the message I want to give to the banks here, we need to make sure innovation applies to the right things. Otherwise, you will be spending a lot of time, energy, and money on something the customers don't need. So just because everyone launches a new savings app or a social media-based savings app doesn't mean that every bank has to do it. What are your strengths? What are your weaknesses? Are the customers looking for something different from a different bank? If all the challenger banks in the UK, 40 of them, are offering lending and savings products, or at least 54 and 52% of the challengers are offering lending and savings products. So imagine the number of offers available in the market, all competing with each other, all targeting the same set of people, the millennials. That's another conversation we need to have. And who is actually thinking about completely new products, something that has never been tried in the market? So challengers are not willing to experiment beyond a certain point because they don't have the investment, and the VC system works in such a way that tried and tested business models are encouraged. So this is the gap today. So challenger banks are doing absolutely phenomenal with the customer experience angle, but the sheer number of products and services in the market, that's something we are still not seeing enough. That brings us to the question, who do we target and how do we create the target segments for each of the new products that we want to launch? One thing we need to remember is the markets are getting smaller and smaller, and what we call the hyper segmentation is happening, where each individual is a category in themselves. We use data and analytics, and that's the biggest innovation today in fintech, because the amount of data and analytics, especially around distributed ledgers happening today, is absolutely great. So use them to create highly personalized solutions for the market. I'm not saying women as a target market is unique in itself. Maybe not. But have a think about what kind of target markets work and how much segmentation we should do with every new product. One thing I see working really, really well is not the women bit, but goal-based products. If you offer a product or a service that brings you closer to your life goal, that's useful, and people find that useful. Because now you're stepping away from the cold facade of a bank, and you're telling your customer, by the way, we know exactly what you need to do to make that happen, to buy your new car or get your wedding planned or go on holiday to the Caribbean every year. How do we make that happen? It could be a robo-advisory solution, it could be an in-house solution, but the moment you start using all technologies available to create a goal-based planning, then we've got it right. then it appeals to the customers, and we're doing something never been done before in the market. And again, data and analytics is what is going to get you to that point. And millennials is another huge target market for all the banks. And I can assure you, every bank I've spoken to is working on millennial offerings. However, the issue is that the millennials are growing up, right? Every year, they're changing their goals, their needs, and their demand for experience. And someone born in 2000, that's a Generation Z, is now 17 years old. They're going to have a bank account soon. So this is a set of population that's changing. They may not be hugely different from a Generation X or a Generation Y in 5 years' time. So we need to think again, who is our next target market? Is it those kids who are now turning 15, 16, 17, who's never been through a recession? Maybe they love banks. Maybe they hate the idea of having too many apps on their phone. It's funny because I did a research, a field survey for a large bank in Europe. And I mean, we literally stood in railway stations and asked questions to all the people. And all the people below the age of 20 told us, you know what, I hate having more than 6 or 7 apps on my phone. I hate that we put every data on Facebook and Instagram. I never thought I'll hear that from any teenager, to be honest. But the younger people don't trust apps as much as I think, at least from my age, when I look down, I expect them to love their apps on Instagram and Facebook. But that's not happening. They may turn into a bank or a personal advisor or a branch. We don't know. So that's the point. We need to think ahead in terms of who is my target and how much do we segment them so that we give them exactly what they're looking for. So this is a segmentation in InsurTech, for example. I mean, if you look at the number of startups coming up in insurance and InsurTech, it's tremendous. I mean, the number of segments we are seeing emerging on a regular basis. The same as banking, but the segmentation here is critical because the number of product lines are so diverse and so different from each other. But the same push that we spoke about, the consumer push, I need to compare all my insurance products in one app. So that kind of desires. I want to compare all the pricing of new products available in the market tomorrow with my app. So that desire is driving the bottom part of the infographic. Whereas the insurance firms need to compete with these startups too. So all the carriers, the traditional carriers and brokers, are changing themselves radically with the help of data, with the help of new devices, sensors, your Apple Watch, your Fitbit. So all of these devices and new data and social media data available is driving insurance in a way we have never seen before. So the pressure is again coming from the top and the bottom. At the end of it all, we need to have simplicity. We need to be able to provide something that the customer is looking for today in a simple manner, through the simplest channel possible. They don't care if there are bank branches or not. Honestly, I don't care, as long as I get to do what I need to do in the simplest way possible. If I have to phone up, again, it's a real-life story. One of the banks I work with, they said, our strategy is to eliminate all the bank branches and go completely digital, just like a challenger bank. It's a fantastic strategy. However, the customers then realized when they went completely digital that a bank branch trip would take them, or standing in line in a branch, used to take them about 10 minutes. It was very, very frustrating, 10 minutes. Now, when they went completely digital, they're on the phone for 20 minutes to get the same thing done. So it's great to have a better channel strategy in that you need to reduce the number of channels and the unnecessary channels. However, it has to offer a simpler and better customer experience. If not, there's no point going digital. So what constitutes simplicity? Fees is a major point here because The problem with fintechs and challenger banks is that all the fees are coming closer and closer to zero. Even if it is something like TransferWise, where you transfer your money from one country to the other for almost zero fees. It's like £2 or something like that, compared to a bank which is £40. Two robo-advisory firms and savings firms, from current accounts, all of them are using fees as one way to bring in a new set of customers. So again, targeting the millennials. The young population, maybe they don't have enough money to pay us as an advisor. So let's offer them robo-advisory, which is almost free. So that's a very, very common strategy. However, that is not a sustainable strategy as well. I'll come to that. But that is what's happening in the market, and we need to realize that. The second change that's happening is the amount of information, the number of terms and conditions and the documents we provide is reducing rapidly. Now, this is also a dangerous phenomenon because we need to make people understand, kind of educate them and tell them, this is what you need to know for your investment. You know, you can go here or there. You know, it's not like everything you invest with us is going to give you 30% returns every year. So the kind of understanding of the financial product that you're getting into is reducing day by day. And that's a dangerous situation, something every service provider and every corporate has to understand so that they can take steps to provide that education in a different way. You know, make it more fun, make it more engaging, use gamification or anything to still drive people to understand what they're investing in or what they're doing with the bank. And the third thing that's changing also, like we have seen, the underlying products are getting simpler and simpler. So everybody is in the current accounts game in the UK. I don't know much about the Nordics, and I think the banks are doing much more interesting stuff here. But in the UK, everybody is into current accounts. But there could be something completely new or something completely radical that we are missing in the process. Now, this is the scary bit. If the fees are coming down lower and lower every year, it means the customer lifetime value you get from a customer is also coming down year after year. The marketing costs are never going away. The acquisition costs are the same. The retention costs are getting higher and higher. It's harder and harder to retain the customer with your service. But the lifetime value is coming down as well. So this is the danger of the equation we are seeing in the fintech world today. And there's a correction happening right now. So this quarter, we saw the fintech investments coming down for the first time since 2013, I think. And there's also a need for startups to kind of work towards revenue. It's not about capturing a whole new demographic, but it's also about bringing in sustainable revenues and growing them, and helping the ecosystem grow with it as well. So that's absolutely important for startups to remember. However, any technology that we adopt, which is all absolutely brilliant. I mean, anything we can do with technology to reduce costs or to serve the customers better is absolutely phenomenal. However, we should be careful that we don't act like Dilbert here, where we implement a blockchain because it's blockchain without actually understanding where the benefits are going to come from. So that's a correction that's happening in the market right now as well. We see that blockchain companies are being asked, what is your use case? How much revenue are you going to make out of your use case this year? Much more than before, which is a great change to happen to the fintech industry as well. That's it. Thank you.
Thank you so much, Devie. It was wonderful presentation. And same goes for you. Most likely you are here today, right? So people can come and meet you up here.
Oh, I would love to meet anybody who has any opinions on what I said today. I would love to argue with them, yes.
Excellent. Thank you once more.